Hi guys, welcome to this week's video. I hope you all enjoying your weekend. Please don't forget to like and subscribe. And thank you for all the messages again this week. I really appreciate all the encouragement. Thank you. All right, so we had a pretty interesting week, and we also have another interesting week coming up. So let's look at it, some of the things that went last week and what we can see coming up this week again. All right, let me share my video. Sorry, my screen. Okay, so this is what we had, last week. We got the PPI data, we got the retail sales, we also got the initial jobless claims. And the one interesting thing was that a lot of people tend to not pay attention to is the leading economic indicator. It was worse than expected. It's down 8%. And if you go back to and you can search and look at the history of this, normally last time when it came up it took about 7 to 8 months. And back in 1970, I think it took over a year for the recession to come. But this was also an indicator that kind of gives you early predictions, what's happening, what the market is going to look like. And, this being the worst, even though we had pretty good better than expected numbers for the jobless claims, even on the housing side of it, it wasn't bad. And the PPI also came in, better than what they were accepting. So it was 0.2% instead of 0.4%. So a lot of these things still does not set us from a course of saying that economy is doing better, or we are out of this bear market, or we're out of the worst of it. I don't think so. I think this is just part of it that we're going through, and I think we're about to see some of the worst in the market, especially, I don't know if you guys have seen the news or not. Fed has last minute meeting arranged before they go into the blackout period, and which is going to be on, I believe, November 30th is when Powell speaks again at the Brookings Institute. And this is a day before they go into the blackout period. This happened last time when Feds went out on in a blackout period. There was, I believe, the day of or the day before, the article came out that, Feds are not going to be, raising aggressive rates. And we saw that was in October, and we saw the market kind of shoot up and started to move. Then Powell had to kind of come back in and say, well, that's not true. We're, in other words, we're still on pace to raise these rates. So what they're looking at is kind of like I think the reason he's coming back, or this meeting has been arranged, is so they don't see that, market all of a sudden, if the Fed minutes are not received by the market, which comes out on Wednesday, is when we get the Fed minutes that are coming out at 2 p.m. FOMC meeting minutes. And if the market still doesn't get a point that, they're not derailing from it, not raising the interest rates, not tightening these financial conditions, and the market continues to move in a direction that is not in favor of Fed. I think that is the reason that he is this meeting is arranged, so market will get the point that Feds are not walking away from tightening this interest rate, and inflation isn't down just because we got a few numbers better than expected. So I would say definitely pay attention to what if they're not going to come out straight out and say, write it in black and white letter. It's going to be the wordings that you're going to have to pay attention to what they are saying. What we have is, other than the FOMC meeting, we do have, I believe, we have the holiday, so it's a short week, Thanksgiving on Thursday, so you'll see the market. Volume tends to be pretty low whenever we have a long weekend, so something to something to keep in mind as well. And then on the earnings side of it, the two that I will be paying attention to is the DE, just because we have a position in it. So I really want to be paying close attention to the flow early in the week and how the chart is acting out. And it happens to be actually before the FOMC meeting. It takes place before a market even opens. And then Zoom. These are the two that I am definitely going to be watching to see which way and how we act on these ones. All right, so let's look into the charts. So the one thing that I wanted to show you guys was we're pretty much sitting at the similar kind of a setup that we had back in June. I want to say it from May 27th to Wednesday the 8th, June of 8th. So if you look at it and if you look where we are right now, it's pretty much the same setup that we have going up right here. And you can see what happened right after that. And then the other thing was that I noticed on the August month's expiration dates, this is where we topped off on the August, which was the Tuesday, the 16th. And pretty much the same thing happened this week as well, as long as, now we're not coming back and breaking above that. That would pretty much set up the same setup as what happened in August. And then, and that was November is also the same week of where the monthly expirations was happening, and also the VIX monthly expirations, which was Wednesday, and we kind of made the high of it on Tuesday as well. So something to watch or to keep it in mind as well. So let's go into our other charts, the regular charts. The one thing that I did talk about last week was that we tend to see, I'm going to go onto the chart here. We tend to see that every week where it's the 15th since the month of April, we have seen that the candle is that week tends to be the red week, and which kind of lines up with this week as well. We got the weekly candle to be red, as you can see right here. And we had that kind of any month, I would say, where the date 15 falls, that week tends to be the red week. This started back in April when the Fed started talking about all the interest rate and how tightening and how many percentage it was going to be going up. So as you can see, we kind of followed that. And then still that broadening wedge pattern is still intact. Let's go down to the daily. As you can see, actually, I'm going to go down to the hour to show you guys this pattern also setting up. So this will depend on which way we break out now. Do I think market still has another chance to touch 4,000? 100%. Nobody knows which way it would go, but we do know that 4,000 is the next resistance, and if we were to lose this 39.20 or 39.10, we know we're headed toward the downside of it on this way. So something to watch, I would say, is how we react to if market does go toward 4,000, how do we end up reacting to it, or how does this pattern breaks out? If we start breaking above, then you can see that your 200 weekly is 200 daily moving average, and you have your supply coming up, and we have this downtrend line that has been back since from if you go back and you can look at it, this is starting from the top right there. You can see back from the March, April downtrend that we started. So any of this could be retested, but if we start to break and we break below, I would say your confirmation is 39.10. We break below, then you can see we have a room to the downside of it. So let's look at SPY. Okay, same thing, our 200 moving average is kind of sitting there. You do have this demand zone, supply zone right here. So 400 to 408 is still on on the books that it could hit, which is also your downtrend line and your 200 moving average. But if any of this does not break above, or, as you know, the 50% and 62% fib levels can be your golden zones. Any of this getting rejected or breaking below, basically you're looking more room to the downside of it on SPY as well. And I did pull up the new levels. So dark pool print, again, 410 is sitting at 6.6 billion. It was at 10 point something. It came down a little bit. And then you got 398 and 394.60. Right now, SPY is above the 394 level. We're currently sitting at 396. So if we are breaking below and you want to watch how the 394, 393, I like to give myself extra room, especially when I'm looking at the dark pool prints, +2, -2 kind of. So if I'm going to be watching that it is breaking below, I think for SPY, just to be on the safe side, since we've seen quite a bit of a bounce between 389 to 394 level. So I would say you want to wait for a confirmation of breaking below 389. Then you know you got the 382, 384 level is on the books for it. So I did also pull up a few other things from TradyTix. Again, 394.39 is, if we look at it, you got the same thing right here. 394 is 3.7 billion. You got right here, again, 394.39. This is the level that you want to watch. If SPY breaks below, give yourself extra little bit room for it to pull back before you really jump into your puts, like you're going a heavy position. So same thing, you can see how much money is sitting on each of these levels as well. And I also did pull up open interest by strike, and as you can see, puts are overtaking the call side of it. So there is a lot more puts in the system than there are calls as well. And looking at just the call top contracts and puts top contracts, I just pulled up the first page. There is a lot more entries to it. But looking at this, I would say 12/16, December 16th, you have that 400 strike price still pretty heavy on the OI. Like your open interest is pretty heavy on that. And then on the expiry on the puts, you got that 376, and that came up a few times, and then 378. Those two are still, looks like they're building their positions on it. So those are the twos that you definitely want to pay attention to it. Oh, I did actually take a screenshot, and I was going to share with you guys. A lot of the Feds were talking last week, and we saw a lot of them make comments, how like the policies, they just need the rate hikes, and all of that part is not gonna be, they're not looking for or asking the Feds to slow it down. So I think the message here has been pretty clear that Feds need to keep tightening the financial conditions, that they need to continue with to bring this inflation down. Again, I'm gonna repeat myself that, one or two readings of being lower than what they expected it does not mean we are out of the woods yet. And they're saying the top policy rate of 4.75 to 5.25% is reasonable. So I think this is what now the new thing that market is going to start to kind of start building in the price. So you will start to see that S&P starting to react to that as well. All right, so let's look at the US 500. So you guys know that I like to look at all three of these. We quite came close to this 62% on the fibs, and it was a fair value gap as well on the daily. Kind of got whatever the orders were left kind of got picked up. So again, you're looking at the same thing what you have on your SPY and SPX. Those levels are still in play. You do have a supply coming up at the top as well, and your 200 moving average. Either one of these could be touched again before we seal the pullback. However, if we start to lose below the 50% mark here, 39.20, you got the more levels to the downside than to the upside of it. Then I want to also look at the VIX. All right, so VIX is at 23.11 right here. And if I pull the chart a little bit closer to it, As you can see, this tends to be the area of a pretty nice, strong support and resistance that we have broken above it. However, if we do start to break below, we do have that 2164 on the table. However, the other thing is when the FOMC meeting minutes came in, it seems like it doesn't happen every time, but it does tend to do play out at some points whenever we are this low, which we are low this time as well on the VIX. And these two blue arrows are when your FOMC meeting minutes came out, and then VIX shot up. So right here again, when it happened in August, VIX shot up, and we saw that market pulled back. So something to keep that in mind. I would say above 25 basically is concerning for S&P, and below 21, that means we still have room for S&P or a SPY to go up to 48, 412. Any of those levels are on the table. All right, let's look at dollar. Dollar weakened up quite a bit, and we saw that, as I've been saying, anytime dollar is moving higher, the equity market comes down. When dollar is down, equity market goes up. But the thing is, on the daily right here, this was a beautiful bounce right out of the demand zone. We just have to wait and see next week if we come back and retest the demand zone or retest the 200 daily moving average and then move from it. And it is right at the resistance, which had a hard time breaking above it, did try a couple times. So I would say watch to see if we cross and close above 107. I would say this is looking like that. All of the things are going to be lining up, and we will start to see that S&P start moving down, and then we can see the dollar starting to move up at 110, 111. The other thing that you do want to pay attention to is for the rest of the world, how their rates are coming. We're all connected with them, how market moves and how we react to it, especially how dollar reacts to it. So do pay attention to especially the Bank of England, what they're seeing, how the pound is doing. All of these things do tend to kind of correlate together. And then the other thing is XBI. So this is the biotech sector. So anytime interest rates are going up, so we know that biotech needs to raise quite a bit of money because, it's not easy for them to do their do all the experiments or the testings of that they do for startups. They do borrow quite a bit for their trials and to keep it going. So anytime the interest rates are going higher, it's harder for them to get money, right? And this could be also another leading indicator when biotech isn't doing well, when they are starting to pull back. You can see that market will start to pull back as well. Whenever this is going up, if biotech is doing better, you will see our stock market doing better as well too. So this is something that you want to, start paying attention to it. And then along with this, your other indicator could be the XLU. Okay, so right here is your the utilities. So utilities that's where the safer money starts to come in, and this could start to move higher as well. It does have a supply coming up, so we want to see how we react to it if we are gonna move above from here. But I would definitely pay attention to how the $70 or $71 do on this one, and then XBI, I believe it was $75. Yes. So if XBI is breaking below, the 79 or $80, or even below 75, I would say this thing will be heading down, and you can see that stock market making new lows as well. All right. So somebody had requested Snap. Okay, nice move out of our daily demand zone right here. And let me back up. Okay. We know that there are quite a bit of a dark pool prints that are right here in the $1079 area. This is my previous line here. We did get rejected. I don't want to say this is the 50%. Yes, the 50% FEV levels right here, 1190, that we weren't able to break and came down. So I'm definitely watching this thing. I believe it's 1020. Hold on, I'm gonna pull up the. All right, right here. So 958 is the level we want to see how Snap reacts to it, because that has 102 million in dark pool prints. So right now we're sitting at 1052 on Snap, but your next biggest dark pool prints are 995 and 9.58. And when I pull out the call to put ratio is, as you can see, it's the $10 call and $10 strike price as for a put. And open interest on, I've been noticing that this has been going up on the $10 strike price on Snap. However, you also have a decent open interest on the call side for $10, even though now the strike price is in the money, but this open interest is what you want to pay attention to if it's starting to come down or not. If it is, then this is what we have. The 9.58 is your next dark pool print, especially with this where it rejected at the 50% level. If we do bounce and we want to see how we react to this, if you do jump into a call, your take profit needs to be between here, 1190 to 1150. However, this is a pretty bearish candle as well. Bearish engulfing. So if we are going to start to come down to it again, as you can see, 948, and that happens to be your very high dark pool print as well. And then you have the demand zone. Any of this breaking below 867, you got the 747 on the table for this one. All right, I'm gonna quickly go through a few charts. Everything is kind of sitting in the middle. There's no really clear direction for me to say, oh, this is gonna go up or this is gonna go down. It's more so we need, especially where SPY and VIX is kind of, we need SPY to pick a direction. Either we are gonna go and break 400, 402, and we're headed toward 408, 412, or we're going to break below 394. We're headed down to 390, 389, and then, 382, 380 level is what you want to see on SPY. So we'll quickly look at some of the charts. Let's look at Apple. Again, kind of looking like a double top as well on Apple, and we're still in a small, we're still below the 200 moving average on the daily, so want to see how it reacts. If it can go back up to 154, 158 area, reject, and then we're looking down to the downside of it. I'm looking somewhere in the 132, and my final on this is, when the whole hell is done with us dropping, this is where I'm looking in the 82 area, minimum to $54. I know, call me crazy, but if we are really in the bad a recession, or we're in this bad economic turndowns, this is totally able to happen on Apple as well. So, but I'm not saying it's going to happen tomorrow or in a week or in a month. This is a long-term view. In between, you are going to have these bounces. You are going to have these run-ups. When you look at stuff like that, you're looking at contracts that are 2 years, 3 years out. You're not looking at something for, monthly expiration or 3 months expiration. So always remember that. All right, so everybody's favorite, Tesla. All right, we're sitting right at what I had drawn last week or a few weeks ago. I had said this thing, and we are below that dark pool as well, 183. But it is also looking like a double bottom as well. So if it does have some sort of a bounce, I think a good place to short again is anywhere in the 195 to 200 strike price, 200 area. And then it has a more room to down to to head down. And when you are taking a position, if you're taking it, let's say it was at 204, your stop loss has to be, somewhere in the 210, 211 area. So if it is breaking above these levels, that means your position is, or your analysis invalid, because that's a pretty strong resistance. If it starts to break above, then it's headed toward the 222 area as well. All right, so let's look at, we've been watching Costco a few times. Costco has a diamond on the weekly. Yeah. And we just back tested that diamond. What a beautiful setup. I would definitely pay attention to it. 524. Give yourself a little bit more room. If it is running and you're thinking about taking a put, wait for somewhere in the 132, 135 area to get rejected. And this thing could set up for a beautiful fall as well. And it is, and I actually haven't changed any of these lines because they still are respecting these lines. So you don't have to draw a new line just because you went through a week. If your previous lines are still respecting, there is no point for it. We are right at the 62 fib level as well. So definitely watch how we react, or how this diamond gets rejected, and the way we pull back to it. I had marked it, I think, Tuesday, November 15th, and it kind of lined up. That's where we ended up making the high of it and then dropped from it. All right, let's see what other pictures have I gone over before. My list here, NVIDIA. And I rejected a little before the demand and the 200 moving average, but this resistance was pretty key. We did have a fake out of a break, and this candle that day was kind of an indication that market should pull back. And not market, NVIDIA should pull back, and we had a nice pullback to the downside of it. Now you can watch to see any pull up and rejection in the 162 to 170 area with a proper stop loss. This could be a good trade as well. So something to watch. $3 is my another favorite one that I'm always playing this one. We filled the gap very nicely. We rejected right in the supply. We actually even almost touched the supply in the 170, 172 area as well. I actually didn't update my chart, so this is no longer those profits. We are right at 160. So if it does lose, it can come back down and test the 200 moving average, which is in the 154 area. So that would be a nice few dollar move. But I would wait to see what kind of move back up it does. Since gap has filled, it's just going to take that away. All right. So again, nice setup of this rejecting right in the supply zone. I'm just going to delete this as well since in that trade. All right, let's see. Crocs was another one. I almost called it out a call, and then I changed my mind, said no, and guess what? Crocs moved very nicely. I had said in a previous video, if we break above $87, we have a room up to this supply zone, and guess what? We're almost there, that it could test and get rejected and come back down. But it also has this you can call it as orders left in this area fair value gap, that it could come and test and then pull back. So I think Crocs still has a little bit more room in, or a little bit more strength left into it to pull up, and before it pulls down, before we see the pullback. So but it did play out, and I actually did mention it in the group, saying we're going to take a Crocs at this call, and then closer to the end date, and then this candle appeared, and I was like, nah, or this candle appeared. I think it was this candle that was the date. Yeah, Monday. I had said, okay, we're gonna look for a position in Crocs, and then I was like, Okay, maybe not, just because of this candle being faking me out. And then the next day we had a $7 or $8 move in this place. So it's okay. Sometimes you question yourself too. And if that happens, always go with what you believe in. You don't have to take a trade just because you had said if it does this and I'm gonna do it. I just didn't feel right and I didn't take it, but it definitely made a really nice move. So something to watch, I would say, is 105, 107 could be a top for it before it pulls back. All right, last one. Can I look at GS? Beautiful turnaround on this one as well too. Again, when I say they are stop loss hunting, this is exactly what happened right here as well. You know, we topped off and then you had a candle on Tuesday the 15th, made the top of it or the high of it, and then pulled back. So we actually took a put on bot called the put on GS, if I'm not mistaken, and this paid us very nicely as well. All right, so that's it. That's what I have for you guys, but I'm going to quickly go over where our positions are. So this is what I called for the month of October. We still have, or actually first week of November, we still have 2 positions open. We have JP Morgan and Ford open. Not worried, JP Morgan is out to March, Ford is up to January, and already gone through these ones, but then you can see we had 100% win rate, 100% win rate until end of October. And then these ones, once these get either closed or depending on what happens, I will update this. And we had an amazing week of November 7th to the 11th. Again, 100% win rate. As you can see, majority of our percentage are above 10%. And then last week was pretty good week as well too. About 10 alerts that I alerted in. This is the live trading. So this is not just we do live trading, I also call out swings that I am taking personally. So as you can see, we took, actually, this was amazing DLO. It just dropped on a bad news and we were able to catch when it started dropping. So 156% was on my last contracts. This was called out on Friday, so we'll see how it does this coming week. I'm still holding it because it was just called out. All right, and on the bot swings for the month of November, again, if you don't know, for bot swings, we promised that between 5 to 10 alerts per month would be coming out from bot. So far we're already at 9 alerts and 1 is open because this one came out on Friday, and everything else, again, you can see is hit over 10 to 15%, and Apple puts were 120%. And this is for the month of November. For October, we still have few positions open, so I have not updated it. Those positions have a lot of time. Again, I've said it before, DE is the only one I'm a little bit worried, especially they have earnings coming up this week. So let's see how it does. But if for Macy's, we're out to 2024, nothing to worry about. AT&T, we're out to June, and same thing with Esso, we are out to June as well. Plenty of time on these ones. I'm not worried at all. So far, bot's been 100%, and pretty exciting to see all of this stuff. All right, so that's it for me. I hope you guys enjoyed the videos. If you have any questions, feel free to ask or comment it below. And if you like to see anything else, please feel free to message us on IG, or you can put it below in the message. Don't forget to like and subscribe, and I hope you guys have a good week. Thank you.